Hello dear traders, in this review you will find out about relevant forecasts and some interesting news, including a correction in the commodity market that didn't pan out. Freezing weather fostered demand for gas and oil. Stay tuned for more details. Yesterday, the Christmas spirit that seemed to have led to subdued trading activity gave way to excitement amid energy shortages. On Tuesday, natural gas prices in Europe rose and hit a new record high, topping $2,000 per thousand cubic meters. Oil prices followed suit. The reason is the same: the absence of positive changes in inventories, the volumes of fuel production and supplies, as well as the winter season exacerbating the risk of further price spikes. This crisis that has enveloped the European countries is already becoming the new norm. Besides, a technical pullback following historical record highs is now common. Therefore, the oil market may well decline today, though hardly significantly. Thus, on Tuesday, Brent crude oil futures continued to rise and added 2.69%. As a result, the benchmark returned to the level of $74 per barrel. Although its pace of recovery is high enough, the key resistance level has not yet been broken. The focus of traders is currently on the level of $76.50. If the price is able to overcome this mark, Brent crude oil will most likely extend gains. If not, the quote may return to the lower boundary of $70 per barrel. Unlike the energy market, the foreign exchange market seems to be enjoying a pre-holiday mood. On Tuesday, trading activity was subdued. Amid the empty macroeconomic calendar, the ruble started to trade sideways. However, the energy market may well stir up the Russian currency today. Rising prices for gas and oil traditionally support the ruble, and today will hardly be an exception. Given the Bank of Russia's recent decision to increase the key rate, the current circumstances may help the ruble become more attractive ahead of the holidays. In the meantime, the technical analysis does not signal any positive changes. The dollar-ruble pair is standing still. It seems that the trading instrument is stuck in a trading range. The levels of 74.50 and 73.30 rubles per dollar act as its upper and lower boundaries respectively. In this case, the best tactic is to trade with a view of breaking through one or another boundary of the price range. Thus, the pair is unlikely to get a new impulse until it breaks through one of the indicated levels. As for gold, the surging energy prices had no impact on the precious metal. On Tuesday, gold tried to reach the level of $1,800 per ounce, touching it, but then immediately slipped to the 1,790 mark. Its feeble attempt to overcome the significant level ended with a sideways movement. Given thin trading volumes, it can be assumed that gold will hardly gain strong momentum in the near future. Yesterday, gold futures bounced off the level of $1,800 per troy ounce and settled at $1,787. This mark previously served as the upper boundary of the sideways range, and now it may well act as the basis for further stagnation. If the price fixes below $1,780 per ounce on the 4-hour chart, the asset is expected to decline. Otherwise, gold will remain range-bound. And that's it. As you can see, the holiday sentiment weighs on some markets somehow. Keep up to date with the latest news, build your own strategy, and make your profit. See you back soon.